Hello, my friends. Today is March 1st, and this is Markets Weekly. So, this past week was a very exciting week in markets. As we warned a couple weeks ago, we seem to be in the process of topping. So, first, let's talk about what happened the past week. And secondly, let's talk about why March 4th is emerging as a focal point that could determine the trajectory of the markets in the next few weeks. Okay, first, looking back the past week, we had a few down days and we had a big jump on Friday, but overall, it seems like, at least looking at the major indexes, we are losing momentum. Now, the S&P 500 is only a few percent below all-time highs, but it's been somewhat range-bound over the past few months. So you can see those moving averages slowly plateauing and trending lower. That is reason for caution. But when you look at investor sentiment, investors have become pretty bearish, even though we are not far from all-time highs. This survey of investors shows a huge jump in bearishness, and judging by reaction on social media, there are also many retail investors that are unhappy as well. I think part of that reason is because that even though on the index level we don't see big losses, looking beneath the index level, some of the more speculative plays have been doing very poorly. Looking at Palantir, for example, Palantir absolutely skyrocketed the past few months, but in a short amount of time is down 30%. Looking at another very speculative and famous asset, Bitcoin, is also down 10% in a short amount of time. And of course, everyone's favorite Nvidia, even though we had earnings that at least met expectations, looking at moving averages is very clear it's losing momentum as well. So a lot of the investments that have been working very well, these momentum trades over the past year, have not been doing well. And we can imagine that investors that are really exposed to them have not been faring well. Now, these have become so popular that you even have all these levered ETFs sprouting up, trying to capitalize on the momentum. And these levered ETFs have done very, very poorly. So it's easy to see how investors could be feeling fairly negative, even though the big indexes only show very modest declines. But aside from that, though, taking a step back, the broader picture does suggest that growth is slowing. Now, we can see that in the PMI numbers, we can see that in sentiment surveys, and we can see that in the Atlanta GDP now, which now forecasts a shocking decline. Now, to be perfectly clear, a lot of that is really just due to imports. It seems like a lot of businesses are worried about tariffs and so are front loading their imports. Now, the way GDP is calculated is that, well, GDP is trying to measure the goods and services the country produces. One way to measure that is to basically figure out what everyone is spending, right? Because, one person's spending is another person's income. If you can tally up what everyone is spending, you get a good idea of what the economy is producing. However, some of that spending goes to foreign producers, so that spending that actually isn't part of GDP. So it's not goods and services produced in this country. When you have a lot of imports, well, that's a lot of spending that goes abroad that has to be subtracted from GDP, and so that front loading of tariffs, say maybe you wanted to buy a bunch of machinery later on in the year, decided to front load that in the first quarter instead, or the fourth quarter of last year, then that's going to have an impact on GDP, and that will probably be unwound over the coming quarters. So again, don't be too worried about that negative print. But aside from that, though, other survey data does suggest slowing GDP, and so there is reason for caution. And you can see this in interest rates as well. You can see the 10-year yield has declined notably after hitting a local high at 4.8%. Now, in addition to that, I think there is, increased confidence that maybe Doge is going to make a dent in fiscal spending. Now, fiscal spending, of course, it's very large and unsustainable. Everyone agrees on that. So having less fiscal spending would be good for the longer-term health of the country. The Government Accountability Office themselves estimates that we could have as much as $500 billion in annual fraud, not waste, fraud, in the budget. So Elon is working hard to try to shrink the government spending. Now, there's this interesting chart by Anna Wong of Bloomberg Economics looking up and tallying up what Doge has done so far, and it looks like they've done about $100,000 in layoffs. Again, that's from the buyouts and the very public terminations of agencies like USAID and so forth. But Anna makes a very interesting point in that, this kind of doesn't show the whole picture, though, because a lot of the size in the federal government is not in its direct employees, but also through this big complex of grants. If you look at the federal employment over the past few decades, strangely, it's been about 2 million for some time. Now, that doesn't make sense, as after all, we know the government is growing, we know the economy is growing, so how is employment kind of around 2 million? So, a big reason is that it seems like many agencies in the federal government decided that a better way to operate is to, instead of hiring people directly, just to hire a lot of contractors. Now, contractors can be fired at will, whereas it's very difficult to fire federal employees. And sometimes contractors can do a better job as well. Now, there's this interesting work by Brookings, and this is from a few years ago, that shows that even though the direct employment of federal employees is only 2 million, if you the contractors and everyone else, it's several million more. And these contractors are paid through grants and other forms of spending. So as Elon is cutting federal employees, he's also cutting things like grants and spending and so forth. And it's very public about that on the Doge Twitter handle, which everyone should check out. And that's likely going to have a bigger impact on unemployment and growth than the market is thinking. And so as the federal government shrinks in its spending, that's definitely going to have, in the short term, some growth impacts, and perhaps the market is reacting to that as well. Again, this is all up in the air. Doge is still in its early phases and subject to many legal challenges, but it does seem like there is some determination to reduce government spending. In the short run, that's going to have an impact on growth, but eventually, the economy will restructure, and the laid off contractors and federal workers will go and find work elsewhere in the private sector. Now, all of this, of course, slowing growth, cuts, fiscal restraint, and all that, it's all weighing on the markets, as well as the retrenchment of over-leveraged plays. But I think a big thing is looking forward is the increasing prospect of tariffs as we get closer to April 2nd. So secondly, let's talk about the state of tariffs. Now, remember, just a few weeks ago, President Trump suggested that he would put 25% tariffs under IEEPA laws on Canada and Mexico, and at the last moment decided to not do it or suspend it for 1 month. And now that time is coming again. And so there is, again, concern in the market about whether or not President Trump will come in and put those tariffs on. He has been suggesting publicly that he will do so, although, again, he could always postpone it later. But even without these IEEPA tariffs, we also know that very clearly on April 2nd, we're going to have the reciprocal tariffs, whereas at that time, there will be enough investigation and paperwork for the administration to carry out Section 301 tariffs, where they will place tariffs that are equivalent to whatever other countries are tariffing the US. Now, this could be substantial for some countries. For example, India is very famous for having large tariffs on other countries. If the US were to reciprocate, that means much higher tariffs on India. So we don't know how this is all going to turn out, but it is, I think, something the market is thinking about. Now, looking carefully, so again, this very interesting chart from Bloomberg suggesting that if tariffs were to go, the March tariffs on Canada, Mexico, and China, again, President Trump also says that he wants to levy an additional 10% tariffs on China, in addition to the 10% he put on February. Now, those tariffs did go through, whereas the Canada and Mexico tariffs did not go through in February. If that were to happen, well, the total tariff rate on imports, the effective tariff rate on imports from the U.S. imports is going to go up a lot based on the study from Bloomberg. Now, what would it take for tariffs to not go into effect on Canada and Mexico? It's hard to say, really. This could be a negotiating ploy, but from my observation, President Trump is quite serious in welcoming Canada into the Union. This past week, the past 2 weeks, he had a dinner before the Governors Association. So, speaking to all 50 governors in the US at that meeting, he discussed the prospect of Canada becoming the 51st state. And at his cabinet meeting the past week, his first cabinet meeting, he also discussed welcoming Canada into the Union. So it does seem like that is something he's serious about, and that could be a motivation behind tariffs. But I think something new has also been reviewed the past couple of days, and that is the prospect of creating Fortress North America. Now, Secretary Besson has suggested that maybe, Canada could match the tariffs that U.S. put on China, and that seems to be something that Mexico is willing to do as well.
I do think one very interesting proposal that the Mexican government has made is perhaps matching the U.S. On our China tariffs. I think it would be a nice gesture if the Canadians did it also. So in a way, we could have Fortress North America from the flood of Chinese imports that's coming out of the most unbalanced economy in the history of modern times.
So another way out seems to be if Canada and Mexico would match U.S. tariffs on China. So this way, in effect, creating Fortress North America and freezing China out of the North American market, at least unless they have some kind of trade concession. So that is a way out of this dilemma. Now, it looks likely, though, that even if President Trump were to punt on tariffs on Canada and Mexico, he would still be raising tariffs on China another 10%. Now, Bloomberg looked at this and suggests that if Trump goes through, then the tariffs imposed on China are going to be much higher than the ones that he did in his first trade war. So we're only in the early months of the Trump administration, and already the tariffs on China are going to be higher than they were the last time around. And one additional wrinkle is that they now are not allowing the $800 de minimis exception, whereas in the past, if something was shipped from China that was valued at less than $800, they would not be subject to tariffs. Now that has gone away as well. That was a big beneficiary to, let's say, small online businesses that were selling out of China. So the massive increase in tariffs, potentially in just a few days, with China and maybe Canada and Mexico, is definitely weighing on the market. And even more importantly, what happens on April 2nd. So this is something that we have to look forward to, even if we get a reprieve on March 4th. In a few weeks, we're definitely going to have big tariffs. Now, none of this should surprise anyone. These are things that have been well telegraphed over literally years. So I'm not really sure why anyone should be surprised. And if it were to happen, though, my base case is that the market would not like this, didn't like it in 2018, and so we could have a bit of a shakeoff. So again, everything is going to be on March 4th and then April 2nd. But in the meantime, I think we should also be careful that nothing goes in a straight line, either up or down. Okay, so that's all I prepared for today. Thanks so much for tuning in. Remember to like and subscribe. And also, I have actually been invited to testify before the House Monetary Policy Task Force on Tuesday. So if you guys are interested, welcome to tune into that. It will be live streamed on YouTube, and I will tweet out the link on Tuesday. So very excited to be on Capitol Hill. This will be my first time. All right, talk to you all next week.